Hello and welcome all. My name is Kruti and you're watching informative videos by Kruti. So in our previous video we have seen what is mutual fund and why we should invest in mutual fund. So in this video I have come up with advantages and disadvantages of mutual fund. Before starting, if you have not subscribed my channel, then please do it now itself and also press bell icon so that you don't miss such informative videos. Advantages and disadvantages of mutual funds. Whether you are a seasoned or a first-time investor, a mutual fund is something you should seriously consider adding to your investment portfolio. So let's see the advantages of mutual fund. First is liquidity. Unless you opt to close-ended mutual fund, it is relatively easier to buy and exit a mutual fund scheme. You can sell an open-ended equity mutual fund unit when the stock market is high and make a profit. Do keep an eye on the exit load and expenses ratio of the mutual fund. Second is diversification. Equity mutual funds have their share of risk as their performance is based on the stock market movements. However, the fund manager spreads your investment across stocks of companies across various industries and different sectors called diversification. In this way, one asset class does not perform, the other sector can compensate to avoid loss for investor. Third is expert management. A mutual fund is a good for investor who don't have time or skill to do the research and assets allocation. A fund manager take care of it all and make decision on what to do with your investment. A fund manager and the team of researchers decided on the appropriate securities such as equity, debt, or a mix of both depending on the investment objective of the fund. However, the fund manager also decides on how long to hold the securities. Fourth, less cost for bulk transaction. You must have noticed high price drop with the purchase of increased value. For instance, if a 100-gram toothpaste costs rupees 10, you might get 500-gram pack for say rupees 40. The same logic applies to mutual fund unit as well. If you buy multiple mutual fund unit at the time, the processing fee and the other commission charges will be lesser as compared to buying one mutual fund unit. Fifth, invest in smaller denomination. By investing in smaller denomination, as low as rupees 500 per SIP installment, you can spread your investment in mutual fund over some time. This reduces the average cost of mutual fund. You spread your investment across stock market lows and high, regular monthly or quarterly investment as opposed to lump sum investment gives you the benefit of rupees cost averaging. Fifth, suits your financial goal. There are several types of mutual fund available in India catering to investors across all walks of life. No matter what your income is, you must make it a habit to set aside some amount, however small, towards investment. It is easy to find a mutual fund that matches your income, time horizon, investment goal, and the risk appetite. 6. Cost efficiency. You can check the expense ratio of a different mutual fund and choose the one with the lowest expense ratio. The expense ratio is the fee for managing your mutual fund. So now let's see the disadvantages of mutual fund. First is cost of managing the mutual fund. The salary of the market analytics and the fund manager come from the investor along with the operational cost of the fund. Total fund management charges are one of the first parameters to consider when choosing a mutual fund. Higher management fees do not guarantee better fund performance. Second, exit load. You have exit load as fee charges by AMCs when exiting a mutual fund. It discourages investor for redeeming investment for some time. The indirectly worked like a lock-in period that fund houses uses to maintain stability of fund. It also helps the fund manager gain the required fund to purchase the appropriate security at the right price and time. Third, dilution. When diversification averages your risk of loss, it can also dilute your profit. Hence, you should not invest in many mutual funds at a time. As you have just read about, the benefit of mutual fund can undoubtedly override the disadvantages if you make unperformed choices. However, investors may not have the time, knowledge, or patience to research and analyze different mutual funds. Investing with clear text should solve the problem, as we have already done the homework for you by picking up the top rated funds and the best fund housing in the country. Let's see the 5 frequently asked questions. First, why invest in mutual fund? Investing in mutual fund helps in wealth organization, security of capital, and regular income. Mutual fund also can benefit by diversifying your investment. You get expert management, tax saving benefits, liquidity, flexibility, and convenience. Therefore, it is considered as one of the best avenue for investment. Second, can you lose money in mutual fund? The profit and loss in the mutual fund is highly dependent on the underlying security perform and the market performance. Therefore, due to this volatility, there is no assurance that you will not lose money in mutual fund. Through experts recommend that before investing in one of them, you should clearly have understanding on what mutual fund is. Third, what are the factors you need to consider while choosing the best mutual fund scheme? Before choosing a mutual fund scheme, one should look for the following factors like performance, AMC track record, the fund manager experience, performance against category, expense ratio, the scheme assets under management. Fourth, what is the best strategy for you to enjoy highest return from mutual fund? To enjoy highest return, you can go for high risk option. Carefully across assets the investment objective and choose the right fund to diversify the portfolio. One can also opt for index fund that have lower charges as compared to actively managed fund. Fifth, what are the problems of mutual funds in India? Although the mutual fund industry in India offers various schemes, there are certain problems. This includes low financial literacy, malpractices in trading, rising investors, complaints, etc. I hope you like my today's video. Please do like and subscribe my channel, and also please share this video with your friends and family. Thank you.